Good evening, everybody. We're going to get going at 8 o'clock Sydney time. If you're on the YouTube channel, I can't see the chat, but you're more than welcome to use the link that I put in the chat to register for the webinar. Come in so that you can chat to me. So yes, I can't see the chat, but you're more than welcome to watch there on YouTube. To everybody else, I'm just going to wait just a couple of minutes for people to come in, and then we'll get going. Okay, so thank you for your patience. Okay, good evening, everybody. Thanks for your patience. We'll get going. So my name is Duncan Cooper. Welcome to this evening's webinar with AUDJPY Securities. And tonight's live forex market review. And we're going to go through the charts, look at high probability trading levels. If you don't know me, then I'll tell you all about myself in a moment. I'll just get you to read through the risk disclaimer before we do progress. Any questions, just put them in the question and answer box. I've got the chat box open too, but questions to the question box is always helpful. If you're on YouTube in the live stream, I can't see the chat. If you want to ask me questions, just register for the webinar, come in on board and join the rest of us. All right, moving along. My name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at AUDJPY Securities. And I've been a full-time trader for a good many years, mentoring clients for a good many years, more than 15 years trading. If you want to contact me about the education and webinars that we're doing at AUDJPY, just email me duncan.cooper@audy.com. And you can also connect with me at the AUDJPY.com website on the Market News tab, at the YouTube channel, AUDJPY Securities Australia, personally on Twitter and LinkedIn there. So I'll just leave that on screen just for enough time for you to jot anything you want to jot down. Not too long because I want to get to the charts. And in regard to the beginner webinar series, we just finished that yesterday, the last run of the current time. We're going to be restarting on Tuesday the 15th, not too far away. So in the meantime, on our Tuesday, Wednesday, Thursday webinar time, 8 p.m. Sydney time, we're going to be going through live market analysis. If you want to get access to our new Telegram channel, you can contact Nathan Bray, nathan.bray@audy.com. Within that, myself and Lenny and Nathan were putting in some market analysis, myself particularly very much around the webinar structure, the tools that I've been teaching, determining trend, support and resistance, and the key levels intraday that could be holding or potentially may hold during the trading day for you to look at to trade up or down from. So if you'd like to get access to that, just contact Nathan Bray. His email's on the screen. So let's get straight into it. And just before we get straight into it, these are my charts, and you'll see my charts aren't the same as the ones that you can just freely download from the AUDJPY Securities website. So what I'll do is I'm going to give you Nathan's email address in the chat. You can contact him to get access to my set of charts. You can contact him to get access to the Telegram service as well. So I'll put that in the chat for you. There you go. So his number's there, his email's there. So just connect with Nathan. All right, so I'm just going to actually go to forexfactory.com. I just want to see what is coming up from a news perspective over the next 24 hours. Obviously, we've got the Russian-Ukraine war at the moment, which is not great at all. and any news from that can just come out at any time and affect the market. So we have to be very aware of, are we wanting to trade in this environment at the moment? But from a news perspective, that we can understand what's coming out today. We have at 11:15 p.m. my time, Queensland time, the ADP non-farm employment change coming out, and then Canadian interest rate change, Fed Chair Powell testifying at 1 a.m. in the morning there. So just head over to Forex Factory and just review what items are coming out that might impact the pairs that you're wanting to trade. Any headline news regarding, the Ukraine-Russia war, go to cnbc.com. You'll see the headlines there. I'm not sure whether you can really trade based on those headlines, but you'll at least know what is going on, up to the date kind of headlines there. All right, let's get to the charts. And just want to click through. Really tonight, I want to look at setups, talking about the market in terms of its volatility. Just at the moment, the pound dollar here on my 15. I actually highlighted this area in the Telegram chat as a potential level of resistance. We actually broke below. This is 4-hour resistance at 133.09, breaking below to test 132.73 day support. And I said we might come back up to the figure 133.09. That could act as resistance for a retest and failure. Now, here's a Telegram service. That was the actual post here. So what we're doing is posting in a chart, commentary around the chart in terms of trend, support, and resistance. And I was emphasizing that we might come down to day support, have a bounce, and 13300 to 09 could be resistance for a retest failure. So it's having a bit of a retest failure there at the moment. Of course, the market's very volatile. That retest failure could be very short-lived. So we have to be very aware of our technical analysis tools at the moment. Can work perfectly, but as well, if some news comes out, they can just get destroyed, especially if the news that comes out from the Ukraine and Russia environment is contrary to what you're seeing on the chart. So you need to be very aware of what's happening. So I just want to start with the dollar index. What we're seeing is it's coming up and testing at the moment. It's going to go to the monthly chart. So you've got a good picture of this. Clear monthly trend. Last month, we actually finished slightly negative, but it's almost a doji candle. And we were held at monthly resistance at 97.68 level. This month, you can see we're positive, testing that level at the moment. So back on the euro dollar and the pound dollar declining, the euro dollar is quite positive, coming up to test that level. So there's your weekly look. High tops and bottoms. MACD may once more be starting to cross up. Daily chart, you can see there we've had, this is the 5th day where we've been trying to move up here. There's a couple of negative days in there. Not sure whether the feed's slightly incorrect, but the last 2 days, positive, start of the month. And, we might be breaking above that level. So monitor that. If that's moving up, pairs to the US dollar will be clearly moving down. And S&P 500, what I've noticed, I've got this fib drawn in. This is actually drawn from last month's high to last month's low. What I noticed, just want to double check that I'm not lying. That's correct. That was February the 2nd high. So that's basically the candle of last month. And this retrace that we've had at the moment back above this monthly level of support, 42.68. We've just retraced 62% or fractionally shy of. So we traded back up inside last month's candle. Possibly that could be the intra-month high at the start of the month. And, if that's the range of last month's candle, I can just select it. If we do a similar size candle this month down, and that is the intra-month high already formed, then, we could be seeing a move down into around about, let's call it the 3,900 level. Time will tell. Obviously, at the moment, we've been seeing a little bit of positivity, bouncing back above that monthly level of support. And you can see yesterday we couldn't get below that monthly level support. But if we start to, we have a negative day and close below there. That's negative for the stock market. It's going to be negative for the currency market, I'm sure. So keep your eye on dollar index and the S&P 500 for general direction. I'm just going to start from left to right now. Aussie yen. This is my day chart look. And I might just take a couple of lines off just to show you the high time frame. Just one line off. This is the weekly chart look. It's a bit mixed. We have a lower bottom here, high top, lower bottom. And then we have this rejection weekly candle up at weekly resistance here. So my key weekly resistance level is at 83.97 at the moment, which we touched sometime in 4 weeks ago. So we're in this current week here. So about 3.5 weeks ago, we came up to that level. And the last 2.5 weeks, we've just been trading inside the range of that weekly candle. So are we failing at resistance there to maybe move back down to, go to the day chart? Are we failing up here? And I put my daily level back in now. It's coming from over here. I could be using this one here too. So that one is at 83.73. There's just another one fractionally further up at 83.82. But the weekly resistance, once we touched it 2.5 weeks ago, we can't quite get there. We're just being held. We're kind of trading between 84 and 82 weekly support from this old top over here. So the question is, yesterday we had a negative reversal candle. We've come back up today to test 83.73. Are we reversing at daily chart resistance very close to weekly resistance? That's the question. We could move through, obviously, but for me personally, I'm not going to buy into resistance. So my option as a trader is to do nothing or look to trade down from resistance at this point. So for our charts, for our trend is still up, if you're using high tops and bottoms, trends do finish at support or resistance, in this case resistance. For our charts, putting a bit of a rejection spinning top there. It would be nice to see a lower top form and move through the bottom to create a downtrend, and then your initial target, if that happens and you're trading up here, is 82 weekly support. All right, moving it down to 15-minute. In the Telegram service, I updated some charts today. First of all, today I was looking at the central pivot to maybe hold as resistance, but price just went through there. And then I posted later on in the day that we can see that day chart resistance and the 79 fib of yesterday's negative candle range, we're obviously being held there. You can see it. Are we going to be held there for the whole day? Who knows? But clearly the sellers are dominating 83.73 to 83.69. So you need to decide for yourself, are you a buyer or seller yourself? That would be a great area to look for a sell. From a buyer's perspective, I don't know what to do from a buyer's perspective because you're trading into resistance. I don't think there's a perspective there at the moment to buy. If we did move further down the range a bit and you still had a buy bias in your mind that we're going to move through the resistance area at the top, you need to buy at a lower level. At the moment, you're very close to resistance. So you're either on the fence or looking to sell down from resistance in my mind there, okay? So watch. We could still come back up to 83.73 and fail once more. That's the key level of resistance that the market's been held at. You can see it fell here yesterday. It went above, below, rejected on the 15-minute. Today, we're just held there. We couldn't really trade above it. So it's proving to be resistance, okay? Aussie dollar, this is a daily. Lots of lines on here. I might just take a few off. So I can just show you the high time frame structures. Take my daily levels off. I really want to show you the monthly chart here. We're seeing some positivity on the Aussie dollar at the moment, but structurally we're lower tops and bottoms on the monthly. Like these cross down. On the weekly, we are crossing up, but that cross-up's occurring because we're relatively range bound. So I'm not getting that excited about that. You can see that we're getting good support at 69 91 from monthly area over here. But for me to get bullish, we would need to break that weekly top. So we could just be down, rally, or getting all the way up to the top, just short of at resistance, the daily resistance levels that we're kind of holding at. And we could just be moving back down to 69, 91. We could stay range bound for a while in that area if it wants to. Of course, the trend may be changing and we're going to move above 73.14 weekly resistance. But until that happens, I just have to trade what I can see. And what I'm seeing is that the weekly chart is lower tops and bottoms. Yes, it's getting range bound. Day chart's been heading up. It's been really slow and grinding. You can see yesterday we had a negative candle. Put my day levels back in the moment. It's going to go back to the weekly. So key levels on the weekly are 73.14. Down here at support 69.91, and in the range, the market's been working around weekly support and resistance at 71.06 and 71.70. Those lows, it's been operating very much respecting those two lows intra-week. So on the daily, putting my daily chart levels back in, there's daily support. There's a level of resistance. Another level of resistance from last week's high and another one there. So the two levels that it's hitting at the moment, the highest point 72.84, 72.76. Between 72.76 and 72.84, that's where the market's being held at. Yes, we still have structurally on the daily an uptrend, structurally on the weekly a downtrend. So if you think the week is going to change, you need to be looking at a level to buy up from. Maybe that level there at 72.49 will hold for the buyers to find the strength to push through. But if we get two negative rejection candles in a row, that probably is telling you that the buyers are losing control. If we finish up, closing up at resistance today, we may well see a push up and through. So you need to decide what side of the fence you're on. All right, I'm on the seller's fence. I've been saying over the last couple of days, this area may fail. And MACD might be starting to cross down. It's looking a bit negative on the 4 hour there. Lower top forming. If we move through 72.38, that turns that 4 hour chart negative at daily resistance. To the 15, earlier in the day, I posted this kind of picture. 79% level up here with resistance. It was at the area that the market would fail at today. And it's failing there at the moment. Obviously, we can't go back in time and trade there now. If you didn't trade there, you've missed the boat. What we are doing though over the last two and a half trading days, if you look left intraday, 72.49 daily support or resistance is acting as kind of support intraday here, here, here. So today, for the sellers to grasp command of the market, we need 72.49 to become clear resistance. Otherwise, we may once more revisit 72.76. So really operating between 72.49, 72.76 over the last 2.5 days there. Which way is it going to break? Okay. Another negative day today might be starting to show the hand to the downside. If we do go to the downside, so let me just tidy that off a bit. The area that's been getting or showing a lot of support is this weekly low over here at 71.06. All right, you can see it got rejected there to the upside, rejected here back up to the upside. So we're seeing some clear negativity there. I'd expect support at 71.06 in the short term. If we can break that, you're trading down to 69.91. If we break above this area of resistance, you're looking for a challenge at 73.14, moving up and above. Okay. Euro yen, this is very negative. Euro dollar is very negative at the moment. Are we going to get a break of this? This is my daily chart. This low down here is monthly support, and it wasn't that far away. Wasn't too long ago when price was all the way up here at monthly resistance. All right, I'm going to take a number of lines off here so we can go through the time frames. I'll just put them back in a moment. So the clear level at the moment, the question is, are we going to break monthly support? Let's go to the monthly chart. There it is. It's rather consolidatory. It's just been showing its hand though. Like these cross down, when we get a cross down or cross up, in this case, a cross down. Look at the last one. We got a long-term move down. Look at this one over here, a long-term move down. So we've been forming lower top. This is not quite a lower bottom. It's slightly lower to an area here, but it's not a significantly lower bottom. It's not broken, but we don't have a lower bottom and then a further significant lower bottom. So we're obviously challenging that low. There's an area of support there at 127.075, which I should put on my chart. So 127.075. So really the question would be, it's more like, support's 127. It's going to be clear orders down at 127. Does 127 break clearly? All right, that is the question. That's what traders should be looking at if they're looking for a long-term move down. And many months ago, I was kind of looking at this as a double top. And I was saying if we break down this monthly level of support, 121.61.6 would be my long-term target. A kind of 6-month target. I did this at in the Christmas period about the market outlook, and I was looking at that level. I was coming up with that level because I was looking at this, maybe this area here is a double top. I know it's not a perfect double top, but when we're dealing with higher time frames, don't have to be truly perfect. And I was taking that range and then projecting it south. 200% level of that range gets down to 121.61. So I don't know if it's going to get there, but obviously there's another double top up here. I know it's slightly lower top, but really we're double topping up at the top, holding at monthly resistance. And the question is, can we break now the kind of support area for those rallies back up to the tops? All right, so get those levels in. Can we break really 127.07, the 12700 number? Is that going to give way over the next week? If it does, I would and things are very negative in Europe, we could be opening the door for a strong move down. We'll see. All right, so bear those levels in mind. Let's get to my day chart. We can see we're testing that level. Not sure, we've actually been down to 127.38 today, and that lows at 127.37.8. So we're testing it 2 days in a row. Just going to put my lines back in. Some of the higher lines aren't really that important. We've broken below our weekly level support there at 128.24. So any rally, we really need to see 128.24 hold. This weekly level of support here at 127.92, that was acting as support through here. We've tagged that today. We traded a little bit above today, but that's kind of becoming resistance. And obviously we're moving down. So what happens there? Of course, if you want to be hyper aggressive, then maybe you think that's a level to buy it. But as I've just shown you, I'm going to get rid of some of these lines that are not important right now. There we go. These are the most important lines you need to know, and the one below. Old weekly support. Is that going to be resistance on a rally? This weekly level of support resistance, 127.92. And monthly support, 127.37, 127.07 below. Market's actually working perfectly in terms of respecting resistance now. What is it going to do at support? Of course, this could hold. It held here. Held here and moved all the way up. So just need to monitor that level. If you're not in the market and you're bullish, then obviously you could be watching this level to be a buyer. But when I've just shown you what the month is looking like, this might be a bit of a dangerous level to be a buyer at. I'd certainly need to see some more bullish price action on the 4-hour chart, for example. One of the things that's very negative at the moment on the 4-hour chart is we couldn't fill the gap. There was a gap here on Monday. We gapped down 200 pips, I should say, on the open. And there's still a gap up here that hasn't been closed. And then we're obviously trading down and we're testing that level of, we're actually below that level of monthly support at the moment at 127.37. We're trading at 35. So it is lower tops and bottoms on the 4-hour. To get bullish at this level, you'd have to be looking at higher tops and bottoms on the 4-hour as a bare minimum, I think, at the moment in this kind of market. So we can see 127.92 became resistance, moving down. I did post earlier in the day in the Telegram that I was looking at, would price start to find resistance today at the figure and that weekly level of support resistance? And that was a good call. But I will say, though, even though that's what I put in the chat, it's never me that's right. It's always the market that's right, okay? I'm just using technical analysis. So held, we've had a rejection, early London, and obviously that's moving down. So what we're first looking at is monthly levels of support to break. At the moment, if you're not in, it's difficult to get in when price action is challenging support at the moment. Of course, earlier in the day, you could be looking to sell down from 127.92, but that's too late. Into the next 24 hours, that level could still be resistance once more. So watch 127.92 up to 128 or 128.24. But if we break underneath 127, watch for the monthly levels of support to become new resistance for a further move down, okay? I suspect if those levels break, we might not come back to those levels, but we could. So those are levels to watch. Has been good trading here if you were prepared to engage in the volatility. 12800 area, just short of, worked very nicely. Euro dollar, getting very negative, it's moving through the support low here. So this is my daily charts. We've had a double top form up here at weekly resistance at 1482. That's not current level of course. We've broken through some weekly levels of support here now. 3 levels of weekly support that we bounced at last week, we've moved through. So expect any retracement, this low here, this major low, weekly low at 111.21. We're trading at 110.61, so we're 60 pips below it. Expect any retracement that to act as resistance now, okay? This double top, if I project it below, just using my fib and my 200% projection underneath. Just going to go to my weekly chart. That double top projected below comes in at 107.59. My target is actually monthly support at 108.79, which is coming from this low over here. All right, if I go to my monthly chart just to show you where that is, it's this low here. All right, it's clear on my weekly because I've got a number of lines, but it's this low over here. Now, price could break through that level if things are very negative. Clearly, they are. But once, in terms of price, where it has been, price patterns, the 200% level, price will be clearly overstretched at that level at 107.59. To get there, it needs to break 108.79 monthly support. Of course, it can break that. It could actually be wanting to just target straight down to monthly. The long-term 106.35 monthly level of support. All right, that's a major monthly low there. Go to the monthly chart. It's just here. Of course, we could be coming all the way down to 103.40, but probably won't get there this month. But if things stay very negative, we're trading at 110.62. In 6 months we could be at $1. All right. But in the short term, I'm going to go to the 4-hour chart now. You got my high time frame levels. My target is monthly support. Monthly support down at 108.79 down here. So the 4-hour chart clearly down. Like I was just saying on the euro, yen, major level of support broken at 111.21 here. Watch now for rallies to be held there. There's a daily level there too. That's last week's low at 111.06. So 111.06 up to 111.21. watch those two levels to be resistance on any rally, okay? Very difficult at the moment to trade this when it's just starting to move down the chart straight down. So already today, if you're watching intraday on the 15-minute, 1106, once it broke below, became resistance twice here. Resistance the first time, the second time, the sellers were coming in ahead of the level. So quite clearly, the sellers are now defending 11106. So tomorrow, 11100 may be as high as the market can get. All right, so there's a couple of areas to watch there for clear resistance over the next 24. Price may, just keep going down all day today, and it may never get back there this week. All right, those are the levels to watch for any rallies. Pound yen. I'm just going to talk about this double top. Okay, and my double top price projection. This is weekly support here at 152.89, which we're kind of contending with. If we break that level, double top price projection comes down at 148.03. That's below a monthly support here at 148.45. So I would probably target this level here at 149.00. That's weekly support. All right. Of course, at the moment, levels are getting broken everywhere with the volatility and negativity. But this could hold. 152.84 could hold. It's holding at the moment. All right, so you'll just have to monitor that. If you're going to be a buyer here, personally, you'd need to see the 4-hour chart turn to up. This is in a downtrend. It is getting some intermediate buying pressure there today. It doesn't mean to say that we're getting buying pressure there tomorrow. So the overall trend is from the day chart double top. That bias is to the downside. This could be a short-term buying pressure before we break. So I'd be looking for on the 4-hour for a break below 152.84. Does that then become resistance? So can we move below? All right, my trend line used to be double thickness. There we go. Can we move below? Does that become resistance? And then can you trade down from that? Because if that becomes resistance to trade down off, potentially when you move back to your day chart, your target then should be down here at 149.00 for the long term. If you can, look at the long-term pattern, it's a double top, then potentially if we break that level, we're trading down to weekly support, okay? So just monitor the 4-hour chart there at the moment. Of course, there's some buying pressure coming in. Just looking at the 15-minute chart. On a 15-minute chart perspective, when I look at yesterday's trading, in a very negative market, we don't often get much past the central pivot. The high will come in a downtrend in a very negative market. So you can watch that level for failure. Yesterday, you could see that price moved below 154. 154 was support over here the day before. So Monday was support, broke below. Tuesday became resistance. So any rally back up, watch 154 because that could be obviously still resistance. So that level could be watched tomorrow if we don't break support today. If it comes up to 154 and holds and you see some failure there, then that could be where you could get short to trade down for a break of weekly support. All right, you can see it's very volatile. That candle at the moment is just bounced up from support 50 pips. That's how volatile the market is at the moment. All right, so in a very volatile, it's worth saying in a very volatile market like this, you do not have to engage. Okay, obviously every time you trade, you put your money at risk. And for me, if I'm trading in this market, I need to be trading at major levels of support or resistance. Hopefully the market's going to respect that. That's where the large traders put in their orders, because in between these levels, this 150-minute candle is 50 pips long. It is very volatile. So you don't have to trade in such a volatile market. You can just watch and learn for the next time when it's volatile like it is now, so that you could maybe participate. Okay. All right, pound dollar. Of course, I was saying here, this is just proving the volatility. I was talking about 133.09, 133.00 to 309. Did act as a bit of resistance there for move down. We've obviously spiked back up, but that's still where the sellers are. So it's very volatile. Just want to get rid of this cube so we can go to the higher time frame. So the weekly look on the pound. All right, let's go to the day chart. Let me just get a few lines off. So, and let's delete them off. All right, these are my weekly levels. Let's go to the weekly chart. So we were making lower tops and bottoms. We did have a higher bottom form, so it went into a bit mixed late January into February, but we failed up here at 136.43, making a lower top to lower bottom. So I would anticipate, if everything remains negative, that we're moving down to 131.68. That's last year's low. If we break through there, then you need to look at the weekly chart, see how price respects these weekly lows to the left. From a monthly chart perspective, we are putting in a lower top now. So that leg down there, rally, that leg all the way down there could get copied down here. Next key level of monthly support doesn't really come into around about 119.58. That's miles away. That's like 1,300 pips away. All right. So if you can get short for a break at 131.68, you could be trading that down all year if we continue down in that trend that we're seeing on the monthly. So time will tell if we can get down there this year. I don't know if we can get down there this year, but depends how things get negative in Europe. So weekly, as I say, lower tops and bottoms for me. We've broken below 133.57 weekly support. The next level is 131.68. To the left over here, which I don't have drawn in, is at 131.34. All right, there's your daily chart look now. And what you can see is that we did reject weekly support back up last week, but now we're below it. So you should be looking at 133.57 if we get any deep rallies to be resistance now. Okay, that's what I'll be focusing on. Just putting my old levels back in. Those are the daily levels. Of course, if we move back above this weekly level of broken support, we've got daily resistance here, 134.30. If we move higher up, daily resistance at 134.90 and 136.27 all the way up there. I don't know if we're going to go back up that way now, but those are the levels to watch if we did. So at the moment, you can see intraday, that's the candle forming. We're having a bit of a bounce at 132.73. So we need to get past that to then trade down to 131.68. So to the 4 hour, that's my 4 hour level of support or resistance. It's really maybe resistance now. We've broken below it today. So we're stuck between daily support, short term 132.73 and daily support 132.73 and 4 hour resistance at 133.09. So even in volatile times, the market is respecting these levels. You can see I actually posted this level yesterday in the Telegram service, 134.30. All right, that was daily resistance. Double top there. Put the high in for the day and that level to trade down. Got some support at 4 hour support, 133.09. And now we're wedged in between daily support, 132.73 and 4 hour resistance. So what we want to see if you're a seller is that 133.00 area becomes resistance for the market now. If we pop further up, that doesn't make me a buyer because I know the higher time frame trends down. But a level to watch on the higher up would be 133.57 weekly broken support. does line up with the central pivot. So if we suddenly get a strong rally intraday today, that will be a clear level to watch. Central pivot plus weekly broken support becoming resistance 133.57. Tomorrow, if we do see some positivity, we do hold around and get support at 132.73 for a day or two. Watch 133.57 weekly support. That was to be resistance, okay? What we can see here today, all the sellers are congregating and defending now the market in that area, because you can see the 50-minute candles rejecting. All right, so clear downtrend. It's just negotiate the next level of support, holding at the last broken level of support on the chart there. I think, if I was trying to initiate a new trade on this pair at the moment, I would much prefer to be trading down from 133.57 weekly resistance. It's just a better level. That's a stronger level to trade down from than this 4-hour level, but that doesn't mean to say that this 4-hour level won't hold the market. You can see this 15-minute candle is 30 pips long, and it can't hold above 133. So clearly the sellers are there. Just want to see what the euro yen's doing before we move along. All right, see the volatility? It's still holding at 127.37. Lots of volatility. It's not getting back up to 127.92, but buyers are coming in at 127.37 at the moment. All right, two pairs I want to go through just to finish off. New Zealand yen. This is my daily chart. Weekly chart look. I've got a fib drawn in there across that range. I'll just take it up. Well, I'll take it off. We can talk about that in a moment. This is the weekly chart. Structurally, it's lower tops and bottoms. There's lots of support coming in below 75.95. Support low here at 75.22, 74.55. But it's been pinned up here over recent months at this weekly resistance at 78.64. And when we get to the day chart, you'll see at 78 starting to become resistance in here. So we're in a downtrend, lower top, lower bottom rallying. Just to the daily. We're just in between 62 to 79. We got up to the 79 within a pip or two, but then we rejected and got back below this level of daily resistance at 77.99, so the 78 number. So since we've rejected, we've had 1, 2, 3. This is the fourth day where it's traded at 77.99, 78, and then traded back down. So quite clearly, the sellers are looking to hold the market there at the moment. Of course, they could lose the battle and price could move further up. So the levels to watch in terms of resistance are 77.99. If the sellers can't keep control there, your next level on this rally against the weekly downtrend is 78.64. Those are the levels to watch. And the 79% level at 78.37. But clearly, last 4 days, 77.99 is the level. There's no closures above that level. 1, 2, 3, 4, 5 days cannot close. Yes, we're trading above or touching. No closing though. No closing above. All right. Let's have a look at the 4-hour. 4-hour, you can see the tops forming up here. We've actually got a lower bottom coming up to kind of make maybe a shoulder, double head, right shoulder from a lower bottom. All right. Obviously very volatile. It's trying to break down from that level, keeps coming back up. 7,800 level, let's call it that. Say the last 15-minute candle again spikes up. It's withdrawing. Market's very volatile tonight. Intraday, Monday failed. Tuesday failed. Wednesday here. Early Asia, fraction short. At London, there was enough volatility to get up to 78. It's done a retest there. In all probability, intraday on the 15-minute chart, it's just done a little 79% retracement, rejection, okay, on the 50-minute chart there. So of course it can go back up there, it can blow straight through there, but it's rejecting there at the moment. So I'm anticipating that this might be resistance. Personally, I have taken a position at 78. That's not to, try to persuade you to do the same. I'm just looking at that as a clear level of resistance to trade down from. The weekly trend is down, rally. I'm just expecting this might be the topping area for the rally to move down to test these levels of weekly support. All right. Like anybody else, I've got my stop in place to protect my position. If I'm wrong, I already know what I'm going to lose. And the market's very volatile, so I'm just trading small positions with the volatility. So the 4-hour chart, that's really what you want to focus on. The market's holding clearly at the 78 level at the moment. If it breaks above, don't forget the high time trend is down. The next levels are 78.37 to watch for failure. We failed there last week. And up at the top here at 78.64. If we start to move down, the first major weekly level of support to challenge would be 75.95. All right, so that's where I'm initially looking to trade down to. So from 78 down to 76 are the approximate numbers I'm looking at the moment. And then if we do get down to that level, I'll assess how that level looks. What does price do at that level as to whether I'm going to take my trade off for profit? If it gets down there, or do I hold it for, see if I can trade a deeper move down. All right. So got my levels on that pair, New Zealand dollar, looking similar in terms of it's challenging a resistance area. New Zealand dollar, even though we've been, so the New Zealand yen pairs or pair, New Zealand dollar pair, these New Zealand crosses, we've been having interest rate decisions in the New Zealand by the Reserve Bank of New Zealand, raising interest rates, yet the chart doesn't reflect it. Yes, we've been having some rallies, but when you go to the weekly charts of these two pairs, it's still lower tops and bottoms. There's no higher tops and bottoms. And last week, when we had an interest rate decision hike, we came up to old weekly support. 68.04 became resistance. So we moved down to a lower bottom, rally back to weekly old support, held pretty much to the pip. That's that low there, 68.04. We went up to 68.09. This is why it's so important to have these key levels drawn in, because even though your day chart trend is up there, the higher time frame trend weekly is down. So even though this could move up and through there over the next 2 weeks, there was obviously an opportunity to trade down from that key level in line with the weekly chart trend. And there was also a 79% level there at 68.12. So that was a very good level to walk and expect a reversal. All right. Then what we've been seeing from that reversal is the 4-hour now. From that reversal, we've dropped. Then we're rallying back up. I know there's some higher tops and bottoms in here, and there's a gap that we had formed that's got filled. But now from the move from that 79 level to that low, draw fib, we have 79% level at 67.70. See how the market's holding. I posted this in the Telegram service that this could be where price is failing. We had a further stab up yesterday, kind of held there, dropped down. So we've dropped down to a lower bottom like the New Zealand yen. We're coming up. Are we putting in a lower top? So a bit of a left shoulder, head, right shoulder. We've had a rejection doji there at the 79. We're obviously below the 79. Is this starting to form a downtrend on the 4-hour? If it does, then, looking to move down to the low we formed last week, or down to 127 extension, or down to day support at 65.92. I mean, if things get negative, it could go all the way back down to weekly support, 65.27. All right, so just looks like the 79% level there at the moment is where the sellers are obviously holding. Failed at the big 79, are we failing now at the smaller 79 level, 67.70? Okay. Of course, through the trading week, we could come back up and revisit 68.04. So market's been held at 67.70. Hopefully you can see that negative structure that I'm drawing with the fib. That would maybe suggest this is a topping area to move down. We could still move up. If we move up, you want to be watching 68.04. From a buyer's perspective, 67, I would say 67.01 could be where the buyers are. That's really coming from the weekly chart. This is that low here on the weekly that we moved through last month. Some buying pressure has been coming in on that level as we've been moving up to the 68.04 level. So that would be a critical level to watch for support as price is moving down. If you've got your buyer's hat on and you're looking for an opportunity to buy, then that would be a good level to watch. All right, obviously, if we break 67.01, we're probably coming down and challenge last week's low and then day support at 65.92. All right. So this may well just be operating between, over the next week or two, 68 down to 67. All right. Time will tell. At the moment, 67.70 is holding the market. 50-minute chart. Might just get rid of that color. 15-minute chart today, I was looking at this smaller range. We had a negative candle yesterday, so I drew a fib across it. And what I could see is that we were failing up here at a pivot and 79% level, very much like the Aussie dollar and similar to the Aussie yen and the New Zealand yen. They've all been struggling at their 79 levels. Okay, doesn't mean to say they can't break it later in the day, but that's where they've been failing intraday. All right, so those are my levels on those pairs as we're moving towards the end of the week and in maybe still into next week. So any questions? Happy to take any questions. If there's a pair or an instrument you want me to go through, just shout it out. We'll hang around till 8 o'clock. One pair we could look at, just want to see what's going on before I look at anything, because obviously things are very volatile. We'll get down the 15-minute charts and see what price is doing. So we've had a sell-off early London, and we're having a bit of a rally as we're in the London session at the moment. So, you know, euro's coming up. Maybe if you're got your seller's hat on, watch those levels there. 111, well, 111 holds resistance today. Pound yen, it's not got too much to the upside, but it is getting support at the moment at 152.84. Pounds back into that little sell zone that the market's been creating at the moment. So it's just a little bit of upward pressure at the moment. Is that long-term upward pressure for the day? You'll just have to monitor. But I would say in these volatile times, it's very difficult to have a very tight stop, like 20 pips. Because you can see that some of these candles are 20 to 30, 40 pips long. So you just have to evaluate how volatile the market is and then adjust your position sizes smaller and have larger stops if you're trading. All right, let's have just one more pair to look at. We'll have a look at gold because this has been very volatile to the upside. What we might look at is we'll just do a top-down analysis on this pair. And I don't know if you can hear that, but it's starting to rain outside my window. So I apologize for the noise if you can hear it. All right, so we are moving above 2 monthly tops here. We've been getting monthly support. We have been relatively range bound. The focus area really to break above is this major top to the right. $119.20.76. So that has been calling an area of resistance for a good number of months, as you can see. We failed, came back below, and it became the area of resistance. And we haven't closed above it yet on a monthly chart for, well, two months closed above, and then 1, 2, 3, 4, 5, 6, 7, 8. A year and a half, we haven't closed above that level. So it'll be interesting to see what this month brings. Last month, we couldn't close above it. Obviously, we're into, that was February, into March now. We are above, but it doesn't mean we're going to close above. So you need to be, if you're a gold trader, you need to be very much aware of that top at 119.20, because if we keep rejecting it, then obviously the sellers are in control there. So you really need to see 119.20 become support for the market. All right. 119.16.59, you can put that level in too. And then there are some weekly tops here to the left that the market's contending with. I'll just put in the highest level, 1965.62. Excuse me one moment. All right, just close my windows. Hopefully they can't hear the rain, but it's very loud. All right, so hopefully you can see here, it's very critical to get your monthly and weekly levels in, because we rejected monthly resistance last week. This week we're above that level, but we rejected monthly resistance and weekly resistance last week. This week we're positive in terms of getting above monthly resistance. Day chart, if you're a buyer on gold, you want to get long, price needs to hold at 119.20. Between 119.16 and 20 needs to become clear support for the market. If it moves below there, the sellers are clearly in control. All right. Excuse me one moment. All right, I'm back. I'm just closed every window near me so you can't hear the rain. So yeah, so if you're a buyer on this pair or you're bullish, obviously price action is bullish moving up here. The question is, in this key area of monthly resistance, that major monthly top, where was that from? Back in 2010-ish. September 2011. Can we hold above that level? We've had a long period of consolidation. So what I would say from long periods of consolidation, a long trend will move from long periods of consolidation. The question is, has the consolidation broken? So critical to that factor would be, can we hold above 119.20 now? This is your 4-hour. 4-hour chart trend is up. That's 62% retracement, which is just fractionally, but it's at 1930. So it's a little bit below your 1920, 1916 level. But pricing spike into that level and bob back above. Does it bob down to 1913, 62% retracement on the 4-hour? And then by the end of the candle, is it back above 1920? That would be good for the buyers. If it closes below there, though, on the 4-hour, that's not very good for the buyers. All right, you need to see that come down, spike, and move back above. So you know that the buyers are quite clearly there holding it. Like I've been showing you, for example, earlier in the day, or earlier in the webinar, the euro yen here, starting to hold, broke below 127.92, and it's becoming resistance here. All right. You need to see that happening now at 1920 on gold. Any movement back to it, does it hold? Because if it doesn't, then potentially it could be moving lower. All right. So I just wanted to comment. I made that comment there about Let's go back to the monthly chart about consolidation. Some pairs have been consolidating for quite a while. This has been consolidating for a long time. We might be breaking north to the upside. One pair I talked about, and that's the euro yen, where I gave you that long-term projection down at 121 area. When you look at the monthly chart, we've been having a long period of consolidation here. It's been slightly biased to the downside, a long period of consolidation. If we break below, as I was saying, 127, we could just snap into a good trend. Because what you're going to find is if we move below 127, everybody that was buying at 127 or above to trade back up in that range is wrong. Okay, so a clear break below 127, the buyers will have to start to liquidate their positions. So if there's been many long-term traders, let's go back to the daily, who's been buying along this level, it's really between 127.37 to 128.00. All the traders in here back in early December who were buying here for obviously this move, this kind of two-leg move up, back up to resistance, are they still there buying? Or do they still have positions here that they're holding for the long term? Because if price starts to move below there, they're wrong. All right. So then they'll have to rethink about their positions if they really think they're wrong. Because obviously euro is very negative. This has got the euro on the left-hand side of the yen. This is where you can start to see a cascade of price action because people are having to reverse their positions because they're wrong in the market. So at the moment, 127.37 is holding, but quite clearly, as we're saying, watch 127.07. Clear break below 127. We might see a very good trend moving down. All right, at the moment, we've tested it twice and held. But we asked, come down for a test on this euro yen. So now it's being held at what was weekly support. Come down for another test, rally, that 15-minute candle there where it traded back down with a week. It's not quite getting up to weekly resistance, old support. So maybe the bounces are just getting a little bit weaker. But you can monitor that. All right. So any final questions before we go? So I'm going to give you an update to the levels tomorrow. So in this very volatile time at the moment, if I go to the webinar page, because we just finished the last recent run of the webinar series, I'm just using the tools from that series. So tonight and tomorrow night. So tomorrow night's the 3rd. This is that registration option there. More analysis. So I'll just review those levels once more, see what price is doing in relation to what I talked about today. And we're going to be doing the same thing next week, Tuesday, Wednesday. And there should be, let me just refresh this page. It should have been updated today. All right, so that's tomorrow, Thursday, Tuesday, Wednesday. There we go, Thursday next week. Tuesday, Wednesday, Thursday, more market analysis where I'm going to be reviewing the levels that are working in the market in this very volatile environment. So the levels that I'm watching, will they hold or will they start to break? Do they become broken? Support becomes resistance. We can have another look at gold tomorrow, see whether that's holding at its critical level and moving up. The education series restarts on Tuesday the 15th. All right, so I'd love to see you come along to the next webinar. Keep yourself up to date with the levels that are working or not working in this very volatile market. If you're on YouTube, thanks very much for attending. I couldn't answer your questions on the chat because I can't see the chat, but you're more than welcome to come in and register, okay? All right, everybody. So keep your eye on those levels. I just want to go back to the New Zealand yen, see what that's doing, because as I said, I have taken a trade on this pair this week. I'm focusing on the 78 level. So obviously I'm wanting this pair to hold at and actually move down from 78. And now one of the things I'm going to be clearly monitoring, things that are going to make pairs move up with some positivity. Keep your eye on what the S&P 500 is doing. It is not wanting to break below 42.68 monthly support. It's getting some support there in the short term. If that moves up strongly, then we might see some more positivity, especially on the Aussie crosses and the New Zealand crosses. All right, but as I referenced earlier, we have retraced 62% of last month's candle. Often we fail at that point to move down. So time will tell, we can revisit that tomorrow. All right, everybody, thanks very much for your attention this evening. Thanks for hanging out with me. Stay safe. Have a great evening wherever you are, or a great rest of the day. And I'll look forward to seeing you tomorrow.